Because of Corona, so many sectors have been negatively impacted. But FMCG is the only sector which is not that badly impacted by coronavirus. And the reason behind this is that the product of FMCG sector generally belongs to essential category. So today we are going to analyze the stock of the company which belongs to FMCG sector. Can you guess the name of the company? Okay, I'll give you a hint. Whenever you walk into a supermarket, you buy almost 50% of the products which belongs to this company. They have a diversified range of products. You wake up in the morning, brush your teeth, take shower, you have your breakfast, and you clean your house by using products of this company. So, to know more about the company, stay tuned with me till the end of the video. And the stock is in front of you. Yes, today we are going to analyze HUL, which is Hindustan Unilever Limited, which has got a diversified range of products. Let's try to understand how Unilever was started. Unilever was founded in the year 1929 by a merger of Dutch margarine producer Margarine Uni with a British soap maker Lever Brothers. This was a joint venture between Margarine Uni and Lever Brothers. Margarine Uni was basically involved in production of margarine, which is a kind of butter made from animal fat, whereas Lever Brothers were producer of soap. Both of them came together and formed a joint venture known as Unilever PLC. As we use limited after the name of company in India, in the same way, PLC is used as a suffix after the name of company in Europe. The term Unilever was coined by combination of uni from margarine and lever from Lever Brothers. Thus, Unilever was a British-Dutch multinational company which was established in or which was headquartered in London. This British-Dutch conglomerate have their presence in more than 190 countries. They have their subsidiaries all around the world. In India, it was established in 1956 through the merger of Lever Brothers with Hindustan Vanaspati Manufacturing Company. But later on in 2007, it was renamed as Hindustan Unilever Limited. Thus, HUL is a Indian subsidiary of Unilever PLC, which is headquartered in Mumbai. HUL acquired Lipton in the year 1943. In 1944, they acquired Pepsodent. In 1950, they launched Sunsilk. In 1957, they launched Dove. By the end of 1970, they acquired almost 30% of Western European ice cream market. Mostly they used the heart logo for ice cream while keeping the original name of the company intact. In 2018, they acquired Horlicks for about 3.1 billion pounds. They have four different categories of products or brands. I will just quickly try to read out the name. First category is from food and refreshment product, which includes Brew, Group Bond, Horlicks, Kisan, Lipton, Nor, Annapurna, Magnum. Second is home care product, which includes Surf Excel, Vim, Cif, Comfort, Domex, Rin, etc. Third is from personal care, which includes a very famous cosmetic brand known as Lakme, Tresemme, Pears, Vaseline, Axe deodorant, Ponds, Lux, etc. And the last category is water purifier segment, which includes Pureit. Oof! And the list is endless. I am feeling as if I am advertising for HUL or what. Let's have a look at the shareholding pattern of HUL. More than 50%, that is almost 61.9% of the shares are held by the promoters. And out of this 61%, 47% of the shares are held by Unilever, which is a parent company. Then other majority shares are held by mutual fund houses, insurance companies, foreign institutions, and domestic investors. The very good thing about this stock is that no shares are pledged. That means the promoters have not taken loan against their shares. So which gives us a green signal to buy this share. Let's try to understand the returns which it gave within different time frame. I have taken this data on 3rd of July, and here you can see within a day it gave a return of 0.93%. Within a week it gave a return of 0.83%. In 1 month it gave a return of 2.47%. In 3 months it gave a return of 0.87%. In 6 months it gave a return of 12.63%. YTD, which is year to date, it gave a return of 12.95%. YTD means if you have invested in HUL at the beginning of the financial year, then it would have given you a return of 12.95%. In 1 year, it gave you a return of 21.70%. In 2 years, it gave a return of 32.24%. In 3 years, it gave a return of 98.28%. In 4 years, it gave a return of 141.88%. In 5 years, it gave a return of 135.08%. And in 10 years, it gave a return of 706.95%. So it means if you would have invested in HUL 10 years back, then at present it would have given you a return of more than 700%, which can definitely beat the inflation rate, as well as it would have given you a return more than FD. Let's have a look at the past performance of this company. I have taken 3 years data with respect to sales, profit and EPS. And here we can see that there is a gradual increase in all the figures. The top line, which is sales, has increased from 2018 to 2020. Also the profit has increased. EPS, which is earning per share, has also increased. Market capitalization of this company is above 5 lakhs crores. Market capitalization is the net worth of the company if I were to buy the whole company. PE ratio of this company is 75.03, whereas the industry PE is 67.40. This is a negative sign. That means the PE is higher than the industry PE, but it is justifiable with the strong fundamentals of this company. PE gives us the idea how much times I am ready to pay in order to acquire this stock. Here in this case, we are ready to pay 75 times of its earning to acquire a single stock of HUL. Over the long run, we can see the stock have performed very well. In 2010, the stock was trading at 242 rupees, and now the stock is trading at around 2100. So here we can say that the stock is very good to be a part of our portfolio for long run or for long term investment. Let's have a look at the latest updates of HUL. HUL's leading cream, skin lightening cream for women, which is Fair and Lovely, was widely criticized for perpetuating racism. So HUL has decided to rebrand its product. Now they are going to drop the word fair from Fair and Lovely, and now they are going to rebrand it as Glow and Lovely. The second update regarding HUL is that they have announced the acquisition of V Wash, which is a female hygiene wash, from Glenmark Pharmaceuticals for an undisclosed sum. So this was the latest update of HUL. HUL recently had its 87th AGM, which is annual general meeting. While addressing in the AGM, Chairman Sanjeev Mehta spoke about the impact of COVID-19 on their business, how their sales was hampered in the last quarter because of this pandemic. While addressing, he stated that currently they are operating at 90 to 100% manufacturing capacity to overcome this situation. They have also launched 50 new products in health and hygiene range. Initially, they used to import raw materials and packing material worth rupees 429 crores from China. But now they have started working on finding out the alternatives which are possible for these two products. So these were the major key takeaway from the 87th annual general meeting which was held by HUL. Let's quickly try to recap what we discussed today. This company started its business in Europe and then expanded all around the world. We also saw the four major categories of product in which this company is carrying out its business. We also saw the shareholding pattern of this company in which majority of the shares are held by promoters themselves. Also, the past performance of this company is very attractive. We also discussed the latest news, which was regarding the rebranding of Fair and Lovely and also acquisition of VWash. And at the end, we discussed about the major key takeaway of the 87th annual general meeting, which was held recently. So, this was my study, my analysis about this stock. Before investing in this stock, do your own analysis, do your own research. Also, if you want to invest in the stock, don't accumulate the stock at a single shot. Try to buy the stock at every dip. I hope you have understood what we discussed today. Till then, bye bye. See you. Stay home, stay safe.